Hello, everyone, and welcome back to another episode of the Let's Get Technical series. I'm Kavita Agarwal, the founder of EXP Invest. We are doing this live session to discuss with you the past trade that we took in the stock of Deepak Fertilizer. Now, I know the fertilizer stock is back in discussion, but while we still have an active position in some of our clients' accounts in this particular stock, we took a very attractive and profitable trade in this same stock few months back. Now, if you know about my profile, you know I am a hardcore swing trader, which means I identify opportunities, take my positions, book my profits, and get out. Every Wednesday, I bring to you one such stock where we took a position and executed it. And we analyze what we could have done better to number one, make sure that our capital was deployed to the market more efficiently, and number two, make more money. So without much delay, let's move on to the charts. So here, as you can see, I'm going to make this full screen. This is the chart of Deepak Fertilizers on the 75-minute time frame. White pin shows you where we entered into the position, and the yellow pin shows where we exited the position. So we made around 11.7%, or to round it off, say 11.5% profit in a matter of 28 days. So 1 month and 11.5% profit, I would say not bad. So let's get into the details of why we took this position and how we played this out. To begin, we will first establish the underlying trend of the stock, and we always do that using the weekly time frame. Now this is the weekly time frame, and as you can see, the trend lines are already drawn. The trend lines are always drawn using the maiden trend line methodology. So the maiden trend line was chosen on the basis of these multiple peaks, these concurrent peaks. You could also at the same time choose this line as the maiden trend line. I'm sure the concept of maiden trend line, you must be hearing it for the first time because I came up with this concept. What we do in this is we choose two major peaks or two major bottoms to draw the first trend line, and the rest of the trend lines that we draw are all drawn in the same direction with the same slope, which means we take the maiden trend line, we clone it, and we keep placing it on other peaks and bottoms to identify not only the primary trend of the market or the underlying stock, but also make sure that we are identifying the main support and resistance zones. So using this trend line, maiden trend line, we have already cloned and identified the major peaks. And so I, as a technical analyst, I have realized that drawing trend lines randomly by joining random peaks and bottoms does not serve any purposes. In fact, it ends up with a lot of biases during trading decisions. The weekly time frame establishes for us that we are in a strong bull trend. So what caused us? Now, if you look at the broader trend of Deepak Fertilizer, what you will realize is that Deepak Fertilizer is a very strong trending stock, which basically means that once the stock starts trending in a direction, it moves in that direction for prolonged period of time. If we take also the D that you see on the chart repeatedly, this shows that it's also a strong dividend paying stock which underwent a split sometime in the year of 2020, in September 2020. Right now, this strong dividend paying stock also has a tendency to trend in a very strong manner. So here we can see it went up nearly 4x in a matter of 1500 days, which is somewhere around 4 to 5 years. Then again, here it went up 17x. This is after the COVID rally. And then what happened is it took a strong downtrend. Now, the first thing that we identified before we took this position was that the underlying trend of Deepak Fertilizer is very bullish, which means that even though the stock has taken a big correction of around 50% from the peak price of approximately 1,000 rupees, we can still see that the stock has a lot of strength. Because we drew our trend lines in advance, we could also see that the stock has started to take support on this trend line. So let me make this trend line a little bit thicker for you. So you can see that the stock is respecting this trend line repeatedly. In addition to this one strong point. So remember here what we are doing is we are building an investment case study, because on the basis of these multiple strengths that we identify while also looking for weaknesses, on the basis of these pointers, we are going to make our decision. The first thing we see is the trend line has been respected, which is great. What is the next thing up? Look at the moving averages. We can see that the price here is intertwining around this gray line. What is this gray line? This is the 500 EMA of the daily time frame. Here again, before the trend reversed, it weaved around the 500 EMA for a while before unleashing into a strong rally. Now, another tendency that we do see in the Deepak Fertilizer price activity is that it moves in clear-cut waves, and it has a tendency of giving a positive divergence on the daily time frame before it unleashes into a strong rally. Now, what is it that we are seeing in the more recent price activity? We'll stretch the chart a little bit and we can see that the RSI of the daily time frame has moved into what we like to call the positive range. In order to emphasize that a little bit more, let me draw some lines here. From this point onwards, what we can see is the RSI of the daily time frame specifically has started to not just breach above the level of 60, but also sustain above the level of 60. When it comes down, it is also regularly taking support at the level of 40. So now the range has shifted from what was before 60 on resistance and 30 minus, the range is now changed to 40 to 60 plus. This is the range shift. Here what we are saying, the range is 30 minus to 60. The range here is now 40 to 60 plus. There's a difference. You can also call this 70. But the uptrend is not very well established. It's starting. So this, when we picked up the stock of Deepak Fertilizer back in August 23, right at the bottom when it was close to the support zone or the trend line, as you can see here, we noticed this. We noticed that the RSI had just shifted to the positive range. This white line that you're seeing marks the positive divergence. See, now there is this thing with positive divergences that if a positive divergence is happening in the middle of a down, usually it can also indicate a mere resting period. When you're trading on the basis of RSI positive divergence, you have to be very sure that you use a stop loss, because it's not foolproof like any other observation in the world of technical analysis and stock trading. What we did here was our initial set stop loss was the most recent low, which is the very previous low, with a stop loss of around 529, just below the psychological level of 530. We went ahead with this position. And then as soon as the stock gave a closing above the most recent resistance level at the level 560, we went ahead and we started revising our stop loss. I'm going to move that. I'm going to clone this. So where would the stop loss move? Initially, when you take a position, when the position is still very new, you have to make sure that your stop loss revisions are not very aggressive. Because when a stock is moving out of a bear zone or a bottom, it has a tendency to revisit that support repeatedly. So this was the first resistance. As soon as it got breached here, number one, we changed our stop loss to the most recent low. Now what happens is we have to identify the second resistance zone. So this peak becomes our second resistance. When this peak got breached, it was time for us to change our stop loss again. Where would our change stop loss be now? It would be at the nearest low that we can observe. Let's put number 2 here. This is where our second stop loss got set at. The next resistance for us is this level right here. So this becomes our resistance number. Now when this becomes our resistance, it's cue for us to change our stop loss. Let's go down to the 15-minute time frame. Now when this becomes our new resistance, this stop loss will get revised to the most recent low, right? When the stock starts moving in such a way that it has not only crossed your cost price, but also one or two resistances above the cost price, then your stop loss revisions can be relatively more aggressive, which means you can start trailing the price more aggressively. So when your position is still new and your stock price has still not moved significantly beyond your break-even price, you want to be very careful in setting your trailing stop loss. One more thing you will notice is that every time I change the stop loss, right, it almost exactly matches the previous resistance zone. So our stop loss needs to be just one step below the previous resistance which the price has crossed. Like for instance, when the price went above this point here, we changed our stop loss number 3 to where the previous number 2 resistance was. 3 and 2, 1 and 2. They are all very close to each other. So the second stop loss, the trailing stop loss, right? The second stop loss that we set was just below the first resistance. The third stop loss that we set was just above the second resistance. And now what will happen is that as the price goes above, we now need to determine where our fourth resistance area is. Our fourth resistance area is basically this point. So this one we set as the fourth resistance. Now this is where we got stopped out, because when we set our fourth resistance as this one, let's write number 4 there, our stop loss got changed from that to the third resistance zone, number 3 here. So what happened here? You can see the price went up and then it immediately came back down here. Now when the price came back down here, you can see that our stop position got exited. Ultimately what happened, in a matter of around 28 days or 1 month, we booked a profit of around 11.5 or 12% roughly in this position. So this is basically the story of the stock idea. First of all, some of you might think that, hey, you missed out on an upside of almost 9.5% here. How is this a good trade? See, in the world of trading, you have to determine that you will never be able to capture 100% of a trend. So this trend, for instance, was 22%. At 11.5% on a round off basis, say we captured around 50% of the trend. I, as a trader, on the basis of all the tradings that I do and the past trade analysis that I've done with the use of my trade journal, what I have seen is that if I am able to capture even 33% of a trend, I have done a good job. My job is not to capture 100% of the trend. My job is simply to make sure that all my entries and exits are based on objective analysis, not on the basis of emotions. If you keep parking your capital in stocks which are not giving you profits, if you keep adding more and more capital for the sake of cost averaging to stocks which are already underperforming the market for you, what is going to happen to your overall portfolio? How will your overall portfolio continue to outperform the market or start outperforming the market for that matter? So this is our mindset, or this is our set of principles with which we operate. And we don't just operate with this, we also help others adopt this mindset and become better traders. How do we do that? We have a Telegram channel, so you can join this and you can learn more about the Trade Together program. Another very easy way of joining the Trade Together program is, if you're watching this on the Economic Times on the ET Markets platform, then right above this window, you will see a bar which says Gap Up. So Gap Up is a very good initiative by ET and Rigi together, where they bring to you SEBI registered and highly experienced research analysts who can help you with your portfolio. I, for example, can help you with one-on-one consultations to devise a game plan for the next 5-10 years with respect to your portfolio. I can also help you with long-term plans. There's a lot that I can help you out with. But if you want to know more about that, you need to join the Telegram channel, the link for which I have just pasted in the chat. So this is all I had for you on the Deepak Fertilizer topic, where you saw that we have already taken one trade in the month of August in 2023 itself and already made 11%. Even though since that point of time, the market is net only 15% up right now, we have already made fresh entries and we are expecting that trend to also unfold. Now, why swing trading is very advantageous is that if you do it right, in a stock that moves, say 20%, you can end up booking profits north of 20, only if your entry and exit is proper, which is of course easier said than done. So with that, now I'm going to take a look at your comments, and if you have any queries for me, help you out with them. So we have Ankita with us. So Ankita, welcome back to the live session. So you want to ask whether you want to know whether CDSL is good for a fresh buy. See Ankita, I'm aware that CDSL has rallied very strongly lately. So let's take a quick look and determine whether it's a fresh entry right now. This is the CDSL chart, and CDSL and BSE, wonderful rally. But what I can see is that this rally, which has started since the last 2 days, I am seeing that there's not much volume participation there. Also, if I tell you about RSI, I really think that the momentum is now starting to get a little bit on the hazier side. So for those who have active positions in CDSL, you should actually be considering booking profits or at least maintaining tight stop losses. So fresh entry is of course not recommended at this point of time, because you want to hopefully make positions in stocks where the rally is pending, not where the rally is behind you. Now, if you buy the stock, you will end up giving your money to people who bought the stock when the time was better. So now is not a good time. But those who have an active position in CDSL should maintain a stop loss at the level of 100. So we have Mr. Sahil Sharma. ICICI Bank, good to buy or not? See, this ICICI Bank, right? I did the analysis in one of the past sessions, and you can clearly see the arrow that I drew. So I was quite bearish on it. So I told people not to buy it because I was expecting the prices to go down, and it has pretty much followed that arrow exactly. And here there is a phenomena called range shift, which ICICI Bank, I really believe it's in the bearish range right now. And is it trying to give a breakout? So it also broke below the 200 EMA on the daily time frame. But at the same time, this stock also has a tendency to give sharp rebounds. See, volume profile has not been supporting the downtrend quite a bit, but right now I would say I would like to wait a little bit more for some more confirmations on the ICICI Bank before you make a long position here, because I am not very encouraged by the observations. Prakash has a question. He's asking, Reliance में fresh entry ले सकते हैं क्या? Let's see Reliance for Mr. Prakash Singh. So Reliance, after having taken a little bit of a correction, I can see it has started to move up. More interestedly, it's starting to give my favorite kind of move, which is a range shift. And Reliance actually already थोड़ा move तो हो चुका है. But the volume with which it is moving is quite encouraging. So I would say that yes, you can go ahead and take a fresh position in Reliance at this point of time. Just make sure that if you're taking a very short term position, and this is purely on the basis of cash, I'm not giving any FNO recommendation here. 2370 should be your stop loss, and on the upside for a short term, very short term target, 2500 is a good call. But I also see the stock of Reliance scaling the level of 2700 in the days to come. Now Prakash ji is also asking for ITC. Let's take a quick look at ITC. Volume pickup is good in the last few sessions here, and it is, I'll do a comparative analysis here. I really think that ITC looks more attractive than Reliance at this point of time, which also makes sense, right? Because the FMCG sector has been showing a lot of bullishness, but ITC so far has not participated in it. And on the daily time frame, it is flirting with the 200 EMA support, and I think it's going to come through. The 75-minute time frame naturally has been in a bit of a bearish range, obviously because the price has been in correction since this point. But if you look at the daily time frame is still in the bullish range, and the price, the RSI is very close to the level of 40, which is a very good indication that it's a good time to make your position and wait. This level looks like a pretty good stop loss to me. So 400 level, 411 looks like a good stop loss to me. And as per the target, I would expect a new high to get forged here and this trend line to get retested. So I would expect 530 to get retested. So on the downside, your stop loss is around 5.5-6%. If you like the knowledge that I shared, and if you want to see more such videos, please be sure to give a thumbs up to this session and connect with me on my Telegram channel and tell me what more you want to listen to about in these weekly series. Because remember, these are totally free live webinars, which I do 3 times a week to share as much knowledge as it is possible for me. The more you ask me via comment on the videos or in my Telegram channel, the better knowledge sharing I am able to bring to you. Because right now, because a group of people approached me, I do one live training session every Sunday. If you want to join that, again, more information on that is available in my Telegram channel. I will see you again on Friday in the Market Outlook series, where I bring to you live market analysis about Nifty, Bank Nifty, and a comparative analysis of all the sectors to see where the momentum is running. I will see you again on Friday at 4 p.m. Thank you and namaste.